Welcome to Miss Market Uptrend. This week we have 5 news. The first one is China factory gate price fall in January and the CPI rise. China's January factory gate price fell more than economists expected, suggesting that flash of domestic demand that has stoked consumer price after the zero-COVID policy ended are not yet strong enough to rekindle upstream sectors. The producer's price index was down 0.8% on a year earlier, extending the 0.7% drop the prior month and faster than the 0.5% fall tipped in a Reuters poll, even though manufacturing activity returned to growth in January. The drop in factory gate price was unexpected because China economic activity returned to growth in January. The official Purchasing Managers Index, which measures manufacturing activity, crossing the 50-point threshold for the first time since September. Julian Evans Peter, senior China economist at Capital Economics, cited large falls in energy and chemicals price and warning supply chain disruption as factors behind the factory gate price decline. China's consumer price rose 2.1% in January compared to a year ago, marking the fastest pace in the 3 months government data showed. The reading comes in lower than estimate forecast by economists in a Reuters poll that had expected to see a 2.2% rise in price. On a monthly basis, price rose 0.8% in January, a higher rate than expectations. Prices are seen to have picked up alongside a resumed consumer activity with China's reopening after more than 2 years of COVID-zero policy. China plans to stimulate domestic demand through policy measures this year, but is likely to stop short of splashing out big on direct consumer subsidies, 3 sources close to the discussion told Reuters last week. The world's second-largest economy continues to face significant headwinds, including an ailing property sector, weakening external demand for Chinese exporters, and near-record levels of youth unemployment. The second news is Asia-Pacific markets mix as China inflation ticks up. Asia-Pacific markets trade mixed on Friday, following moves on Wall Street as China's inflation data came in lower than expected. Consumer price in the nation rose 2.1% in January compared to a year ago. The Shanghai Composite fell 0.18% in the Shenzhen Component shed 0.13%. Hong Kong's Hang Seng Index shed 1.2%, dragged down by technology stocks and leading losses in the region. Overnight in the U.S., stock closed lower Thursday. All 3 major index hit session lows in the final hour of trading, after giving up early gains as concern over the Federal Reserve future moves on monetary policy offset excitement around the latest batch of corporate earnings. The third news is U.S. markets got the Fed's message, interest rate hikes and probably here to stay. The Federal Reserve Governor Christopher Waller stressed that interest rates will likely keep climbing. Interest rate might be higher for longer than some are currently expecting, he said on Wednesday. Likewise, New York Fed President John Williams said that monetary policy could turn even tighter than the central bank has anticipated. The Nasdaq Composite fell 1.68%, the S&P 500 slid 1.11%, and the Dow Jones Industrial Average slipped 0.61%. Markets were also battered by a disappointing earnings season. 42 companies in the S&P 500 have issued negative guidance earnings for the first quarter of 2023, according to FINIFT, a higher proportion than the historical average. The fourth news is concerned about the gold, still on pace for 7th up week in 8, natural gas off 46% in 2023. April gold futures eased 0.65% to about $880 the ounce on Thursday after touching an intraday low of $1,870, but remain higher by 0.1% week to date, on pace for the seventh advance in 8 weeks. Gold is up almost 3% in 2023. March natural gas contracts added 1.4% Thursday to $2.43 per thousand cubic feet, on pace for the first weekly advance in 8 weeks. Natural gas remains about 46% lower in 2023. And the last news is the MSCI added 2 Vietnamese bank stocks to the marginal market index type DGC, KDH, and PDR. At the end of January, Vietnam is accounting for the highest proportion in the MSCI Frontier Market Index, with 29.24%, down slightly from 30.3% at the end of October 2022. In the February 2023 review, MSCI decided to add 5 stocks to the MSCI Frontier Markets Index portfolio, including 2 Vietnamese stocks, SSB and EIB. Meanwhile, MSCI also excluded 5 other stocks from the marginal portfolio, including 3 Vietnamese stocks, DGC, KDH, and PDR. After this reconstruction, the number of stocks in the MSCI Frontier Market Index portfolio remained the same at 96 shares after the portfolio reversal. At the end of January 2023, Vietnam is accounting for the highest proportion in the MSCI, followed by Morocco, Kazakhstan, and Iceland. The top 10 largest weights in the MSCI Frontier Market Index portfolio have many Vietnamese stocks such as HPG, MSN, VNM, VHM, and VIC. All changes will take effect from the 1st of March. MSCI next list announcement is on 11th of May 2023. And that's all. That's the end of the podcast. Thank you for listening.